What's happening, traders? It's Mark here at DynoTrading, coming at you with another video on today's market recap. You can see here it's just around 12:56 p.m. in the afternoon, and we're going to take a look at another wild ride that we went on today on the S&P 500. Okay, so whether you trade the Emini futures version of the S&P 500 or if you trade the SPY, both of them were on fire today. It was just a really good day to look for powerful trading setups using the volume indicator, which you see layered onto the chart. Okay, so what I'm going to try to talk to you guys about in this video is, once again, trading the morning session, right? You saw the timestamp at the time I'm recording this video. It's just about 1 p.m. Central Time, by the way. And look, guys, first of all, there's nothing wrong with trading the entire session. Okay, I know a lot of customers are actively trading from 7 o'clock in the morning all the way until the market close. I get it. You're passionate about the market. You want to trade 7 hours, 8 hours a day. That's great. But what I'm telling you is what I have noticed is a significant amount of trade setups happening just in the morning session, right? Especially with this volume indicator, which really identifies the starting point, as you can see right here, of big, powerful, crazy moves. And look at the time. Once again, folks, this is not cherry-picked. This is actually 8:53 a.m. If you're following along at home, look up the S&P 500. This is the E-mini futures version, but for those of you that trade the SPY, open the SPY, right? Put the volume indicator on top of your SPY chart. You're going to see 8:53 a.m., this beautiful short signal where the volume turned red. In fact, let me go ahead and clean up the chart a little bit, and let's go ahead and zoom in. Let me show you guys this textbook setup, all right? Just a textbook volume-based setup. So look, first of all, I know you guys are trying to short the S&P 500, just like I am. I think everybody out there is looking for a good way to look for shorts, right? This market's been overextended this entire year. I've warned you repeatedly that market sentiment has changed in the month of September, probably going to stay that way through October and November. And rallies, okay, rallies are most likely going to be sold. What does that mean? Well, you look at this giant up move from the previous session, right? The S&P jumped almost 45 to 50 handles, seemingly out of nowhere, right? Catching a lot of traders by surprise, but not experienced traders, right? Not people that know what to look for, that know what they're doing, and know how to identify good trading setups, right? So, I mean, yeah, I guess you could have attempted to randomly short the S&P 500, you know, when the volume was green, but I don't know why you do that. You're essentially counter trend trading, right? Guys, this green and red color band, once again, is your clue to get the market direction right. That's the most valuable and mission critical piece of information. If you can't get the direction right, then folks, guess what? Your trading is going to go absolutely nowhere, and you are going to make those very rookie beginner mistakes of trying to catch a top, right? Don't be that guy who has continuously tried to catch a top on the S&P and got their face ripped off, right? Because smart people, smart traders, wait for the trend to change, right? This big fat arrow that's pointing at the exact moment in time that the trend changed. In fact, let's just go ahead and isolate this bar, all right? So ladies and gentlemen, the trend changed right on this bar. The volume gave us a clue that said, hey boss, the momentum now has changed from green into red. What does that mean? That means that the sellers are now in control as of this bar, right? You see this tiny arrow that's on top of this bar? As of this very bar, the sellers are now in control. And number one, if you've been long, right? If you've been long from this giant uptrend in the previous session, number one, it might be time to start exiting that long. And if you're not long, it might now be time to think about going short, right? And again, folks, you don't know. You don't know for sure that this thing was going to drop 40 handles today, 40 points, right? Well over 160 ticks or pips if you're following along in Forex. But like I've always said, trading is a game of probabilities, right? All you can do is try to put the odds in your favor, try to look for very low risk, high probability setups. And when you integrate that concept with a trend following strategy, right, you're going to see your trading come together, right? This is a chart of the Emini futures, but like I said, guys, this tracks the SPY. If you open up a chart on the SPY today, you're going to see the exact same thing. If you open up a Forex S&P 500 chart, you're going to see the exact same thing, all right, where the volume predicted a sweet sell-off, and it was perfect for people like me who are going out of their way to look for short opportunities. Makes sense? So let me show you what to do with this potential setup. Okay, let's zoom in even further here. Okay, volume shifts from green into red right on this bar. All right, ladies and gentlemen, very simple, not open to interpretation. This is a yes or no answer. Yes, it shifted. Okay, so what you would potentially think about doing is going short on the open of the very next bar and placing your stop loss one tick or one pip above the bar to the left of it. What I like to call the signal bar, but you guys can call it whatever bar name you want to give it, right? I like to call it the signal bar, and this one I like to call the entry bar. Makes sense? And look, the beauty about this type of methodology and approach to your trading is that you only need it to move a couple of bars before you get to break even, right? I think 2 or 3 is enough. So if I count out 2 or 3 bars, right here is where we dump half, right? We dump half, and what does that do for you? Well, that locks in a free trade. Okay? Even if the market does one of these, right? It comes right back and takes out the stop, right? If it actually did that, we wouldn't have lost any money because we dumped half of our position, getting ourselves into a break even, what I call a free trade. We're playing with house money, right? And nobody talks about that. I've seen all these YouTube schmucks here talking about their funny Japanese candlesticks and their scalping indicators, just a bunch of schmucks, right? They don't know what they're doing. Have you heard anybody talk about the break-even approach? Of course not. People that don't know what they're doing will never have any idea what a good risk-to-reward strategy looks like. All right, folks, this is all about, here, let me write this down. This is all about risking 1 to make 10, right? Or to make 50, or to make 100. We never, ever want to risk 1 to make 1, right? This is just silly. Risking $1 to make $1, that's just silly, right? Any good trader will tell you if you want to make money trading in the market, you have to be prepared to risk $1 to let it get to 10 or to 50 or to 100, right? Those big trend type moves. Anyway, so what we've done here is we've become very mechanical, very emotionless with our trading, and when we do get to break even here, we're not tied to the outcome, right? Whether this trade runs for a $10,000 winner or we get stopped out, it should not matter, right? That's what it means to get mechanical with your trading. So if we zoom this bad boy out, I mean, you can just see it cratered for just about 30 to 40 handles on the S&P. Now, you could have cashed out anywhere along the way, right, guys? Exits are very discretionary. There's a lot of different ways to exit out of a winning position, okay? But what a good problem to have, right? What a great problem to have, you know, where you're making so much money that you have to decide where to get out, where to lock in your profits, right? And look, folks, at the end of the day, I've told you repeatedly, volume does not lie. This volume indicator, or at least the way that I've programmed it, does an excellent job of isolating the starting point. Remember, folks, the starting point is what's most important to us, right? I don't want to be notified over here, right? And I certainly don't want to be notified over here at the end of the trend. I need to be notified at the starting point of a trend. Folks, that is the only difference between winning traders and losing traders, right? This ability to identify the starting point of a trend. That alone is going to make a significant impact in your long-term trading, right? Trading for the next 10 years, the next 50 years, the next 100 years, volume won't change, right? To my knowledge, and this is my theory, volume is what moves these markets. Just like yesterday, the volume color band turned green, right? Market participants came in, they all came in at the same time and pushed it up. Today, the exact opposite. They all came in and pushed it down, and it was like taking candy from a baby today. Guys, that'll do it for this video. If you'd like to get your hands on this powerful volume indicator, then get in touch, call, text, email, whatever's convenient, and I'd be happy to hook you up with a free one-on-one demo, really show you how this volume indicator is going to supercharge your trading. Guys, thanks for watching this video, and I'll see you on the next trade.